Hello traders and welcome to part 2 of my Reading Bitcoin Sentiment series. I do apologize, I'm not putting my face on this one. That's because I had so much lag. When I try to create multiple videos for this, it would just keep lagging and I would have to restart the video. So I just decided to ditch that part. But I think we can still absolutely get into everything that we normally get into today. Alright, so what are we going to do today? If you haven't seen part 1 of this series, I would recommend that you watch that right now. In part 1, we went over 60-40 levels that are looking at where overbought and oversold position-wise on bfxdata.com. And we also looked at position spikes where we have many buyers or many sellers all go to one side and what that means for the market. Today, we're going to be talking about trends and counter trends and what that looks like. We're going to be talking about some three-stage theory. This is just something that I came up with when I was looking at patterns of trends. Of course, we're going to go into how can you profit from this, from market tops and market bottoms. And finally, I'm going to ask you guys a quiz of where Bitcoin will go based on what we've learned today with stage theory. All right, cool. Let's get first into what a healthy trend versus an unhealthy trend looks like, and then we're going to get into an example. So, contrary to popular belief, a healthy trend would sound like this and look like this too. What you're going to see is as buyers are going, as prices going upward, you're going to see buyers going downward and sellers going upward. And this is because buyers are exiting as most people are risk averse and taking profit, and sellers are increasing. The reason this happens is because the shorts who get in the market typically don't have most people don't use a stop loss, retail traders. So that means that as prices are going upward, they don't want to exit their positions at a loss, so they continue accumulating. And then we have a spring. So if price is moving upward, we have a very rapid increase where we typically see in this rapid increase, many buyers take profit. And then we typically see after that, and many shorts short. And then we typically see price begin to come down or make a peak. And this is when many buyers buy into that market top and sellers begin to exit at the market top. Okay, so why do we see this? Well, the reason why we see this counter trend is because of the two sides of traders there are. There are institutional traders and big, large retail traders, and then there are the smaller retail traders. For every trade, you have a buyer and a seller, so two parties. And typically what you're going to see in virtually any market is that the institutional traders are running the show and that the retail traders are losing money and making mistakes. And if you can exploit the inefficiencies of the market or exploit the retail traders in the market, then you can make money in the market. So that's what we're going to be looking at today, looking at these mistakes that the buyers and sellers make during a trend and then trying to do the opposite as to act like an institutional trader. Okay, so try to read this and then we're going to get into our first example. All right, so this first example, I kind of just walked you guys through this. Let's talk about what we see. So what I see here is an uptrend, and stage one is where buyers are slowly exiting. Again, this is due to being humans being risk averse and trying to take profit. Finally, after that, when we also see a rapid increase in buyers right here, perfectly fine. And then we see a rapid fall off in stage two right here. Stage two, again, is just an acceleration of stage one. So stage one is a slow exit, and then stage two is that rapid exit that I'm talking about. And in this rapid exit, we go from about, what is that, around 27 to around 18K. So about 10,000 Bitcoin held in long positions are just dumped right here. And then we have a stage three. So stage three is when many buyers rush to buy into the market after they sell. We have two stage threes right here, one right here. You can see the market's going up. Buyers rush to buy that point. You can see that here, where we have a very violent, rapid increase in buyers right here at this market top. And what you want to do and you might be asking, all right, cool, but how do I profit off this? Well, label the stage one, label the stage two, and then finally, you need to act at stage three. So on stage three, what you want to do is do the opposite of what everyone else is doing, of course. So after you see this rapid fall off in this normal plateau right here where no one's doing anything, this price is moving up, wait for everyone to buy. And if you do this, and if you wait for everyone to buy into this market, and then you short or sell here, you will make a massive profit, as you can see right here. And if you wait for everyone to buy here too, you would have made the same profit. And you shorted here, you could have made all of this to around 5.7K from about 7.5K. So that's a fantastic profit if you would just analyze where the market mistakes were. All right, let's look at another example. This one, I'm not really going to tell you guys the text. So I'm going to give you guys 5 seconds to try to think where the shorts are and where the stages might be for this one. All right, so what we see is the market's moving down, and the market mistake here is we see that sellers are quickly moving down as well. So what we see here is stage 1 here, as the sellers are slowly distributing their positions and exiting. We see a rapid fall off, or stage 2, and then in stage 3 we see many shorts short the market again. If you buy here, where many shorts short the market, right about here, you would have made. The market went up to around. The market went up to 8,040. So if you had bought around here and just analyzed this as a stage 3, when many shorts were making a big mistake, you would have made around, by my math, whatever 8040 minus 5.7K is. I think that's like 2.3K of Bitcoin. So that would have been a fantastic buying spot right here, and also it's a double bottom. And this is just what you're going to see in the market. What does this mean? Well, why does this happen? What you're seeing is the market mistake. So people are making mistakes, rapid mistake, because they're all doing the opposite of what the market is doing. That's why I'm calling it a mistake. And then the minute that traders, retail traders, catch on to the trend and start doing what they should be doing, so the market is moving down as shorts are moving up, that's when the market has to reverse, because the retail traders are on the correct side of the trade. It reverses. You see that here too. Prices going up, but then buyers are going up as well. And that's when we have the reversal. Prices going up here, but buyers are going up too. So the market, these retail traders are actually correct in a way. They're doing what the market's dictating, and that's when the market moves down. Okay, let's go on to the next example, and hopefully you are more armed with how to analyze it. Again, this is the same exact market as before, but we're just looking at the buyers. I'll give you guys 5 seconds to label your 3 stages. Okay, so this one's actually very straightforward with labeling the stages. We have our beginning right here at the market peak. I labeled this stage 1 up to here, right up to that rectangular box. So from here to here, this is where we have a slow increase in buyers. Then we have a rapid increase in buyers for stage 2, many making the market mistake. And then we have a sharp decrease in buyers right here at this market bottom. And this rapid increase of buyers as prices moving down is a rational move by the retail traders. And this is when the market rebounded and really screwed all these people over who had, many of them had bought and then just dumped their positions right as the price moved up. And we got a reversal. And then you can see at just the beginning of this reversal that as price is moving up again, look at this, there's a decrease in buyers. And if you look here, as price is moving up again, look, there's an increase in sellers. How strange. This right here, if you had bought stage 3 here and then seen this, and if you had bought the stage 3 right about here, and then seen that the buyers were exiting, that's beautiful. That is exactly what you want to see. And because of this, price went up to around 8K, like I had said. All right, so we've gone over what a healthy trend looks like. A healthy trend being this, as price goes up, buyers go down. And we've gone over the 3 stages that you typically see. And we've gone also how to profit from this by buying and selling in stage 3. One last note before we go to the live Bitcoin example is I want to say that stage 2 typically it can be a rapid fall off, but it isn't always the rapid fall off that you might see. You could also see a slow fall off. So stage 1, for example, I'm gonna go right here. So stage 1, you should see that slow decrease, but you typically don't always see this large movement against the trend. For stage 2, you might just see a slower decrease. That's fine. All right, let's get into the Bitcoin example. Where will Bitcoin go? Let's first look at the long positions. and I'm going to give you guys 10 seconds to label your 3 stages, starting from the buyer peak here. And one hint is that we don't really have much of a stage 2 here, but mainly just a prolonged stage 3 and a slightly longer than normal stage 1. All right, I'll give you guys 10 seconds to label. Okay, so I'm going to whip out my handy dandy Chrome Draw. This is an extension you can use in Google. So what we have here is, as price is moving upward, we can see this looks like a stage 1 to me, right here, from here to here. I would probably call this stage 2, but it really isn't much of a stage 2. And then this is where we get the agreement with the trend, and we have stage 3. With stage 3, we can see the price is moving up. As the buyers are moving up, the buyers have caught on to the trend. And this looks like, the answer to this looks like a reversal. We have a double top here at around 8K both. And we can see that I think price is likely to move downward. I think the only reason price might move upward is if the buyers were to fall off again. But I think it's more than likely that if you see this right here, the buyers have caught onto the trend. I think we're going to be moving downward. All right, let's look at the shorts just to confirm our bias that the market is more likely than not to move downward. I like this one much better because the 3 stages are very, very clear. So yeah, let's look at that. I'll give you guys 10 seconds for this one. It's a bit easier. Starting from here, the minima. All right, so here's what we see. And here's what I see. Price is moving up and healthy trend. Shorts are moving up as well, making a large mistake. We go to here. This looks very stage 2-ish to me, where we have that rapid increase in sellers right about here. Let me just show you that again. Right there to there. All right. And then we have that normal just flattening. You should see that flattening, just where no one's really doing much or knows what to do. And then after we just get that kind of flat as price is moving up, we have stage 3. And then, so stage 3, and now stage 3 is kind of plateauing, which means price is likely to move downward now, which confirms my suspicions that I think price has a high probability of reversing. Okay, so that would be a live example on what Bitcoin looks like today, and what we're looking at for the future. Okay, so that's going to be it for this video. We went over one large topic, which is just the 3-stage theory. Within that topic, we're looking at healthy and unhealthy trends. And we're also looking at how do you profit from this, what's going to happen to Bitcoin right now. And I hope from this video that you can start to look at trends in a different light. That you can look at a trend in the light like this, where you see that the market's making the market mistakes made by retail traders, like stage 1, massive mistake at stage 2, and stage 3 when they agree with the trend. Then you can just look at the market, label it yourselves, and begin to buy and sell on your stage 3s. One last note on the stage 3s where you will act and you will buy and sell. These aren't always, for example, like here, you can see that you might be wondering, wait, why wouldn't I just short like here? Even though the price kept going up, like wouldn't this be a mistake? When do I exactly short with stage 3? So this is just an indication of market bias. What you're going to want to do when you notice the market has reached a maxima, like right here, or a minima, like right here, when we see those market mistakes, you would want to look at your secondary indicators, like your technical analysis indicators or Elliott wave theory, Fibonacci's, whatever works for you is absolutely fine. Support and resistance are fantastic as well. Support here, some resistance here. Look at your indicators and use that to decide when to buy or sell with your stage 3. Again, I don't recommend just using sentiment. I would recommend pairing sentiment with either maybe some volume down here, or pairing it with some technical analysis indicators, maybe some fundamental indicators as well if you want to look at evaluating Bitcoin with like hash rate and difficulty mining and stuff like that. But yeah, so that's going to be it for this video. We've gone over really everything, and then finally we talked about how to trade off of it. with looking at secondary indicators when you are in a stage 3, which is a likely reversal. Again, I do apologize that I did not overlay the video this time. I'm going to try to get rid of that lag, and so that I can do that for the rest of my videos. So I'll work on that. And if you have any questions, concerns, or comments, then feel free to leave them below. Thanks for watching.